Life insurance versus family income versus joint life versus term. Which one is better for dependent protection? If your family depends on your income, life insurance is just a nice to have. Its financial security for the people you love most. But with so many types available, it's easy to pick the wrong one. Let's compare life insurance, family income benefit, joint life and term policies to see which provides the best protection for dependents. First, traditional life insurance. This is the classic option. It pays out a lump sum to your family if you pass away during the policy term. That money can clear debts, cover living costs or fund your children's education. It's simple, flexible and easy to understand, but it requires your family to manage the payout wisely. Next, family income benefit. This one works differently. Instead of a single lump sum, it pays your dependents a monthly income for the rest of the policy term. For example, if you die with 15 years left on the plan, your family could receive monthly payments for that entire period. It's ideal for budgeting, as it replaces your income rather than giving a one-time amount. Now, joint life insurance. This is designed for couples. It covers two people under one policy and pays out once, usually after the first person passes away. It's more affordable than two separate policies, but keep in mind that after the payout, the cover ends. It's a good choice for couples with shared financial responsibilities like mortgages or children. Finally, term life insurance. This provides coverage for a fixed period, say 20 or 30 years. If you pass away during that time, your family gets the payout. It's perfect for protecting dependents while they're still growing up or when you're paying off big loans. Once the term ends, the policy expires with no payout. So, which is better for dependent protection? Family income benefit is the most practical for long-term family support, while term or joint life policies are great for covering specific financial obligations. The key takeaway: choose the policy that mirrors your family's real needs. Because true protection isn't about the biggest payout, it's about ensuring stability for the people who matter most.